Good afternoon, everyone. I appreciate you taking the time to attend this call. I'm Sid Rajeev, Head of Research at Fundamental Research, and our guest today is Toby Chu, Chairman and CEO of CIBT. CIBT is an education and student housing provider based in Vancouver. They are planning to spin off their real estate division into a newly listed public company in the US. Now, this is very exciting for us as there's no publicly listed student housing company focused on Vancouver or even on Canada. So the agenda for today is I will kick off the call with our thoughts on why investors should look into the rental market space in Vancouver. Toby will take it from there and give us some background on his company and any updates on the spinoff. For listeners, you can either wait till the end to ask questions, or if you have questions during the presentation, feel free to type them in and we'll try to respond to them. We encourage questions to be directed to Toby since we have him on the call today. A recording of this will be uploaded on our website. Please take a moment for these disclaimers. Okay, so let's get started. The first point I want to make today is that multifamily properties, residential properties, have been more resilient and have outperformed other property types in previous recessions. Let's take a look at some data. The chart here shows the impact on rent in the US during and after the 2001 recession. As shown, rents of multifamily properties declined less than office and industrial properties during the recession. Also, the rental growth rate for multifamily was significantly higher post-recession. Take a look at the dark green bars here. We saw the exact same trend in the 2008-2009 recession as well. Again, look at the dark green charts bars here. You can see the growth after the recession. Another point to note is that multifamily properties had the fastest recovery to pre-recession peaks and the longest post-recession period of rent growth. The blue bar here shows periods of declining rent. Notice how multifamily had the shortest period of decline post the 2000 recession. Again, we saw the exact same trend in the 2008-2009 recession as well. Multifamily had the shortest period of decline. Now let's take a look at delinquency rates among property types during the pandemic. As shown here in the US, multifamily, which is the third from left on this chart here. You can also see student housing, the fourth from left here. They had one of the lowest delinquency rates in the US during the pandemic. The trend is similar in Canada as well. Rent collections by multifamily properties have been stable during the pandemic. Now that we have demonstrated that multifamily properties are more resilient and have historically outperformed other property types post-recession, let's take a look at why the Vancouver market is compelling. Vancouver has the lowest residential vacancy rates among major cities in Canada. This chart, this table here shows up until 2019. The new numbers are not out yet, but just prior to the pandemic, Vancouver had the lowest residential vacancy rate. Rents are down in most cities due to the pandemic, primarily because of reduced migration and lower number of international students. But Vancouver remains one of the most expensive places to rent, as shown on the table here. Now we see the decline in immigration as just temporary and believe that people will start to travel after we get the pandemic under control. I'm going to end my section with the chart that shows the cap rates of properties by type in Vancouver. As shown here, multifamily properties actually experienced an increase in valuation in Q3 2020, which shows that property, and that's based on the lower cap rate in Q3. You can see from the chart, and that shows property prices have increased from multifamily. No other segment has seen an increase during the pandemic. Last but not the least, Canada and Vancouver in particular remains one of the most popular destinations for international students. With that, I would like to welcome Toby. Toby, I'm gonna let you share your screen to listeners, so to the attendees.
Sure. Okay, am I online on the screen?
Perfect.
Perfect. Okay, great. Good afternoon, everyone. I'm Toby Chu, Chairman and CEO of CIBT. started this company 27 years ago, and we expanded to the student housing market about 5.5, coming 6 years now. So I'll cover my slide in sort of short and concise form. Our skill sets obviously started from the education sector, which naturally progressed us into the housing side. As most people would know, for those who are parents, the most expensive part of the children's expenditure, one is education. Number two is where they live while they are studying abroad or even outside of their home city, right? So some of the key highlights during the pandemic period, just caught within the last 7, 8 months. There is obviously a lot of bad news, kind of rough for a lot of hospitality industry, particular hotels are outright closed for 6 to 9 months. But let's take a look what we have done during the past 6 to 7 months amid COVID-19 between March 19th, 2020 and October 28th. We have completed over $29 million of equity raise, and that's oversubscribed. Our original plan started this in about March. We figured, well, the market is pretty bad. We're able to raise money. We weren't sure. So we set our target on a couple of acquisitions at about 20 million. We ended up at 29 million on equity raise. Okay. In addition to that, we completed 34 million in new mortgage financing with Canada Mortgage and Housing Corporation, CMHC, at 1.88% interest rate. I think this is one of the lowest I have seen past. I don't ever gone this low. If we were going to commit to a 5-year interest rate, we're at 1.69. It's even lower, but we commit to a 10-year term because we feel that 10 years later or 6, 7 years later, after the pandemic and economic reset, I think it will inch back up in 3 to 5 years. So that's why we're locking for 10 years. In addition to that, we also completed 94.5 million of construction financing, renewal of mortgage renewal at various interest rates, right through amid COVID-19. So the market did go to sleep for about, I say, 3 to 4 months since March, April, May, June, July, and August, close to 6 months, and it's waking up to a very active market since September, and all this financing is completed. We also bought 2 buildings for $48.5 million in June. The contract was locked down. It's at the corner of Cambie Street and Marine Drive. Those are the rental buildings we bought. It's 4 years old. And when we completed the financing, it came out the appraisal at $60.9 million. So it's up almost $12 million in a period of 4 months. So that's why we see the opportunity in rental for our business, more particular rental for students. All right. So a little bit of a background who we are and what we do. We started in 1994, CIBT Group. We bought Brockshaw College. A lot of people may have seen their buses traveling around the city, Virgin Radio, C-Fund, and so we do a lot of advertising. So for the school size on the left-hand side, and here you'll see that for international students, so we have about 7,000. But most importantly, during the past 6 to 7 months, we're 5,000 domestic strong, domestic students. And that actually had an increase in enrollment as of September registration. I guess people are following the concept of when you are not earning, you should be learning. So it's a counter-cyclical business, and it turns out to be very true after COVID-19. On the right-hand side is our real estate business, which is now 11 projects, 16 buildings. We also supply to 72 partner schools in the Lower Mainland. So almost 1 in 2 schools, colleges and above, are using us as their housing provider for their education institutions. We support students from 77 countries, 1.5 million square feet, and 3,650 beds, including the built and rezoning under development. Total portfolio grew to 1.5 billion. The rest of this, some of the latest data that what we have done over the last 5 years. Most particularly is equity raise and the amount of financing we have completed. We keep about 65 to 70% LTV, so it's quite healthy. Our book debt to equity ratio is 1:1. And that's where we're going to keep it. But most of our LP, most of our real estate projects ranges at about 30 to 40% equity. So despite COVID-19, whatever, people are panic, but we've done quite okay throughout that season. Again, about COVID-19, a lot of people sort of over-focus, in my view anyways, on the overall, the global environment or the environment within Canada, etc. I kind of focus on the city we live in, which is most important to me because international students or domestic students from Toronto or from the United States or from interior Canada coming to study, they're coming to study in Vancouver. They're not coming to study in Canada. Vancouver is where they live. So whether or not there's 500 cases in the middle of Canada, it doesn't matter to them. It's Vancouver. What is the real number of cases? So obviously in the second wave, this data chart here, as of October 1st, we're 3,094 confirmed cases. Comparing that to Australia, Switzerland, Italy, Germany, etc., we are in very good shape. So if you're a parent sending your kid to study abroad, where would you send them? Would you send them to New York City? Would you send them to Los Angeles with this number of cases? So obviously that has gone up to about 4,000, but nevertheless, on a global basis, we are still one of the safest city with the lowest number of COVID-19 cases in the world. I think that's something that Vancouverites should continue to be supportive of all the COVID-19 control measures. So I think the management of this is very well. So going into on a global basis, international education, company called education.com ranked Canada as #1 in 2020 as the best country for international education. And US News, actually 2020 was ranked at #2 for Canada. Again, because of the management of the COVID-19. So I think that's something again really helped Vancouver's position. Also, other things people should also consider is that, what happened to international students during COVID-19? Nobody's coming in. Let's look at the number of students already in Canada. I think that's the part that people should look at. 642,000 was already in Canada. And most of these are studying 2, 3, or 4-year programs. They're not going to give up their life just because of COVID-19. So some of them, a lot of them, in fact, stay in Canada and not going home. Imagine if a student from India or from Brazil or from some part of Latin America, when they're getting like 80, 90,000 confirmed cases per day, or even United States, why would you want your kids home? You want them to stay in Canada. When they're staying in Canada studying, they need a place to live. That's where student housing is so important, and that's why it did not impact us that much. We continue to have students living there. We are studying here, we need a place to live. So in Vancouver alone, 133,000 as of October. Let's look at some of the statistics. They pay over $1,200 a month, which is reasonable, 14,000 a year. That's a 1 billion in BC alone. Forget about across the country, just in BC alone. And close to 800 million just in Vancouver on the rental market. And the growth rate's been 300%. Okay, amid COVID-19, it's dropped a little bit, but hey, they will come back, all right? Because vacancy rate, as mentioned in earlier slides from Cibt, it's 1%. Let's call it 1.5%. It's still very, very low on a global scale. UBCSFU recorded over 7,000, nearly 7,000 students were on the wait list pre-COVID. And what happened to COVID? The pandemic period, because they built dormitory. Dormitory means you have a bed and a desk, and then you go down the hall for your shower, for your student lounge, for your cafeteria or eating. All those are COVID-prone community transmission concerns. So they all shut down until next year, 2021. So all these people move out to the rental market. So they start absorbing a lot of rental market inventory during this time. But then, of course, there's also the countermeasure because a lot of the people just cannot afford it. So they start moving home. So the vacancy rate, although it was at 1.1%, it could be down to about 1%, but a lot of people just cannot afford it because of economic reasons. And then it's moving back up to about 1.2, 1.3. That's our guess. We think the vacancy rate sort of ease off a little bit, but that's only short term. Why? Because according to Goodman reports, which is available online, Goodman Commercial, applications to build rental properties has gone down nearly 47% as of June of 2020. Developers just fell to sleep. and the city bureaucracy is incredible. So imagine half of the inventory is going to be built than a year before, while the vacancy rate is 1.1%. There's a big supply and demand theory here that people can figure out without too much of a calculator. Anyway, our school, Structural College, has been around for a long time. Below here is where our buses are. Unlike other uh, other business other businesses, we feel that during the COVID period, yes, we slowed down our advertising. We sort of really tapered down. But by September comes, we were aggressive. We were out there. We started recruiting. We started all the back to school campaigns, and therefore our domestic Canadian student registration has gone up 8% instead of going falling back from last year September pre-COVID. So actually, the business is quite steady. Our business model is very straightforward. We identify the property, we design them with slightly higher density now than before. Because of COVID-19, we have to adjust that. We raise the capital. We didn't see a problem at all because the market demands are there and the appetite is there. So I don't believe that all the investors just went to sleep. They didn't, and the amount of money we raised is a good proof of that. And then we oversee the construction, we stabilize the income, we exit to institutional buyer, and then we manage the property for 5 to 21 years, and then we repeat the model. So that's basically what we do at GBC. So this is the division we plan on listing on the U.S. market, separate from the parent company. And here are just some of the typical differences between what we build and what a typical rental apartment looks like. Obviously, slightly higher density, always by the subway station. We always call ourselves rental apartments, but student-centric. We don't go into a purpose-built dormitory because that is a very dangerous area to be in if you are purpose-built when it comes to financing, when it comes to co-living because of COVID-19. We also support over 72 schools in the city, 77 countries, well diversified. Those are very important. And we're now moving toward like building education super centers and education megacities. Again, another comparison between GEC, our business model, and other properties like share apartment on campus at UBC, SFU, or homestay facilities. Which is making us quite a bit of difference and value proposition. We're adding value. Here's a big change on here on the demographic group. Prior to COVID-19, Canadian students represent about 18% of our population at our residence, and now move up to 70%. China used to be 15%. Living at our facilities, now down to 4. So you can see that there's a bit of drop from an international, but then the Canadian students pop in because they're in from Kelowna, from Abbotsford, from Alberta, from Saskatchewan, and they need a place when UBC shut down. So again, proven that the student resident student housing market will always be there. It's whether going to left or right, but they still have to live somewhere because they are not about to give up their whole education because of pandemic. They have to complete their 4-year degree in bachelor's or 2-year master's or career colleges, whatever. By school, we're also very diversified. We don't want to put all the eggs into one school's basket. So we do not go into Kelowna and build something for UBC because what if UBC decided to build their own? We have a problem. So that's our model. Again, here's a chart on as of September 30th. Obviously, the real estate market. Blue is the houses, red is the condo, green is rental apartment. So very steady, bouncing back. We're not building a Louis Vuitton or Rolex watch. We're building a Walmart type. So Walmart business will always be there, no matter how good or how bad the economy is. So that's what I say is countercyclical business. Along the subway line, we always focus on that. We're always along the Cambie Street corridor subway line, and here are various properties, and we just closed the GEC Marine Gateway across the street from the Marine Gateway station. So that's how we position ourselves. The rest would be just various properties available that we invested over the years and done very, very well. This will be available through fundamental research if you need the actual PowerPoint. So that sort of summarizes what we're doing. This may be the last introduction of what we call education mega center. A good it's basically a business model by having 5 satellite campuses of various schools, public or private, university or colleges at the lower floors, and then about 40 floors of student housing above, rental apartments or pre-sale condos, which they can assign us to manage it and rent it out to students. And over 1,000 kids will be living upstairs, downstairs to school. I mean, it's a great idea, right? If you can just take the elevator to school instead of taking a train and a bus and a car, right? So that's the whole concept of education mega center, by integrating residents as well as education and the shared amenities like restaurants and fitness centers all within one building. And the location of this Surrey Mega Center is very interesting. We're at Surrey Central Station, and we're right here, about 50 feet to 80 feet from the Surrey Central Station, across the street, 200 feet from Simon Fraser University, and about 1.5 blocks to the new AI campus, the City Hall, KPU, Queensland Polytechnic is 1 block away, and then about another block for the Surrey City Hall and the Civic Library. So again, that's a big project that will change the dynamic of education, student housing, real estate. Here are just some of the pictures and design in Oak Ridge, Cambie and 41st, and here's the Marine Gateway, where we are. This Pearson is one of our property, 4 blocks down, and here's 2 more new buildings at Marine Gateway, and about 100 feet from the Marine Gateway station, a 4-year-old building. So that's basically summarized what we do. Here's a metric of what we've built for the last 5 to 7 years. And performance, all this available online. So you can always go online and at CDAR to look for our company information. So that summarizes my quick introduction of who CIBT is and what we have done over the past 5-7 years for the real estate side. All right.
Thank you so much, Toby. Do you mind giving us an update on your spin-off? Why are you doing the spin-off, and do you have any updates on the listing process?
Sure. Yeah, one of the reasons that we are looking at separating the real estate side from education side is that we have been dealing with a lot of analysts, whether it's in Canada, in the United States, or overseas. They look at the education side as one type of analyst. Real estate analyst is 2 separate worlds. We have experience in the past when education analysts say, oh, how do I value your real estate? What is cap rate? How does that work? We have a problem. Like we have a $1.5 billion portfolio on the right-hand side, and people couldn't figure it out. So that's one of the reasons we feel that education right here on the left will stay with CIBT listed on the TSC and have this spin-off into a major U.S. stock market because of size and capital requirement over the next few years. We see this to be a $3 to $5 billion portfolio instead of like 1.5 right now over the next few years. So we feel that the U.S. market will have the appetite for it. Some of the comparables, look at Education Realty Trust, which was taken out by a major U.S. real estate player at 49 times PE, trading at $4 billion, was taken private. Another one called ACC, American Campus Community. This morning it was trading at 47.9 times PE at about 4.1 billion market value. So that's why we see the U.S. market would be a good one. However, our investor base will likely be a lot of Asian investors because Asian investors love education, but they couldn't figure it out what it is. They just love it. Real estate, they love it even more. But hey, I don't want to spend 10 million. I want to buy $500,000 worth of stock or 100,000. So by spinning it off and having a number of overseas investors to buy the U.S. listed stock related to student housing, I think that is a good value proposition for them. And then, of course, U.S. market already has a pre-established format and calculations. So that process already started in about 3 months ago. And we recently engaged with a U.S. advisory firm. They also completed a research report, which is published. It's called Stonegate Capital out of Houston, Texas. So we started the discussion process with a number of U.S. investment bankers, as well as from Asia. And then the application form is with our lawyers. And all those will take about 6 to 7 months. We are cautious to making sure that we cover all the bases, right support, right sentiment, People are willing to invest in the student housing. They understand what it is. And that's why we sort of tested water in the last 6 months and completed nearly $100 million financing, mortgage and equity raise. That tells me something. The market did not fall to sleep uh, despite the pandemic. So that progress is now well underway, and we expect to complete the process probably by middle of next year.
Thank you, Toby. I think the reasons why we are so excited about this US listing, number one, it allows CIBT to monetize its equity investment in the real estate division. And number two, I think, and more important, is that you're tapping into a much larger global investor base. Okay, so we can now open the call to a Q&A. We've already received a bunch of questions. Listeners, if you have any additional questions, please feel free to type them in, or you can click on the raise hand option and I can unmute you. So Toby, the first question is, what percent of CIBT's properties are currently occupied?
In terms of occupancy rate, let me give you a comparison. Pre-COVID, we were almost 100% everywhere, always fully occupied. Post-COVID, there was two periods. At about March and April, we dipped down to nearly half of 50%. It was a bit worrying at that time. However, during the month of July, August, September, October, we're averaging at about 75 to 80 to 85% now. We're not fully recovered, but at least 85% recovered. Why is that remaining 10 to 15%? Because we calculate our occupancy by beds, unlike your home, right? You got one room or occupied is occupied. Unlike hotels, you go by doors. Each door may have two beds inside. We calculate by beds. So we have to lower the density during the pandemic period, as well as leaving some isolation units in case we need them. So therefore, we think the optimum during the COVID period until this thing goes away forever, I hope, then we'll be at about 90 to 95%, and we wouldn't even push it to 100. We have to leave some room and reduce the density. So the answer is 75 to 85%, depending on which property. And we expect by January, we'll back to about 95%. In addition to that, I don't know if everybody follows, the Canadian government has announced the reopening of international students entering Canada as of October 20th. So as of a few days ago, selected countries will be able to arrive Canada. Of course, you're going to follow the isolation protocol of 2 weeks isolation. So that's why the enrollment is not picking up again for January and March for international students to enter the country, because it's been lifted for selected countries.
Okay, thank you. I think you partially responded to the second question, which is, how long does a typical student stay on your properties? And are CIBT's rent lower than other alternatives for students?
Okay, there are two answers for that. One, students, depending on what type of programs, we have students coming in for 3 to 6 months. Those are language school students. And then we also have long-term students, which is 10-month contract. Long-term means I'm coming into Canada, or I'm coming from even Alberta, coming in to study at UBC, the Canadian students, on a 4-year bachelor degree. So naturally, they need residence for 4 long years. But they usually like to sign 10-month contract instead of 12 months, because they want to go home during the summer. And then we have summer camp students coming in during the summer to fill up those space under a normal environment. So that's answer number one. And then answer number two. Sorry, what was the second question?
Yeah, the question is, are CIBT's rent lower than other alternative options?
No, we do not compete on strictly pricing, but in terms of apple to apple comparison, we are fully surfaced apartments, meaning that you can move in with only a pair of luggages. Instead of coming in, you got to open a line with tellers, you got to open a utilities line, you got to buy furnitures and then throw them away when you move out. No, we included all that. So we're slightly higher, but not higher in terms of value, but it's higher because of actual what they received. So if you're looking at a rental apartment at $1,000, for example, well, obviously you can't get anything in Vancouver for $1,000. It'll be 4-wall, carpet, and a ceiling. You need to spend extra money. Ours, it will be about $1,200, but it includes everything. You don't have to worry about anything. And plus, If you're staying at UBC dorm, you need to pay 12 months. We all know that, but people didn't notice it. You pay 12 months for staying at UBC or SFU housing, but you only stay for 10, really. During the summer, you go home. So if you work it out, we actually are less expensive. Plus, you don't need to be a particular school student living with us. If you stay at UBC dormitory, you must be a UBC student. You go to SFU, you cannot stay at UBC. You can't. So again, our pricing is competitive. We call it value propositions.
Okay. Is CIBT doing anything unique or additional to attract students during this pandemic?
Yes, for example, isolations. For example, if you are renting a place, uh, let's say homestay, and you feel sick, you're in trouble. The homestay parents will put you out just like that. What we did is we leave some isolation units. So most of our units are 2 bedrooms, so we have 2 persons staying there. If one of them is compromised, what we do is we move them into a single occupancy and leave the other one as single occupancy. So allowing them, don't worry, you won't be kicked out even though you feel sick. So that's number one. Number two is appear on this screen, you know, um, slide number 10. Uh, Various things we're trying to help out in terms of isolation periods. For example, we recently launched a special. If you just arrive from wherever, Brazil, into Vancouver, you need 2 weeks of isolation, right? Where are you going to stay? At Pan Pacific? No, they're closed. So our hotel on Granville Street called GEC Granville will provide you with 2 weeks of free stay, so long you commit to a long-term stay with our residential properties. So you can go in there, stay there for 2 weeks isolated, and then move into our long-term properties. That became very popular because they save some money and then they have a transition right into our long-term properties post-isolation period.
Okay, just one more question. Now that CIBT is taking the real estate division public, will CIBT expand outside Vancouver, or is the plan to be a pure Vancouver real estate story?
No, it will be we will be expanding beyond that. So if you're looking at the size of the market, uh, but we definitely will stick with one particular formula is that it has to be a high density city. So how many high density cities that we can think of? Toronto, downtown is quite high density. Montreal is high density. Seattle, a high density. So those are the ones that we've been looking at and assessing what kind of opportunities that will come about. Plus, we have a Canadian education license. We have the connections within the industry across the country. So it makes it more natural for us to go to Toronto and Montreal versus the United States. So those are the bigger market. But again, our model will be slightly different. When we go into big city, we won't be going there to buy one apartment of 300 beds. We'll be there to build mega centers. That's our new latest model. We'll go to Toronto somewhere, identify a place, and build an education mega center with 6 to 10 schools within that building and 1,000+ beds for that city. But
So you'll be involved in from the scratch, buy land, development, and make big roads. Okay.
yeah, that would be most cost effective, unless there are some, like a court order sale that we're able to enter the market at a discount, which is not unheard of in today's environment. So we are looking at that as well.
Okay, this is fantastic. So, Toby, I don't see any more questions, so that we can wrap it up. All right, everyone. Thank you so much for everyone for taking time today. Recording of this presentation will be uploaded on our YouTube channel shortly. If you're watching a recorded version, please click on the like button if you have enjoyed the video and subscribe to our channel as we produce content every week. And if you wish to see our reports on CIBT, please sign up at www.researchfrc.com and be a member. Thanks again and wish you all the best and stay safe. Thank you, Toby.
Thank you.